Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Thursday, January the 23rd, the year's 2020. Let's talk trading. A trader asked me to analyze the new beast. That's the nickname I gave to the pound New Zealand dollar. So let's just jump right in. And since we're going to be looking at a new pair, if you actually going to trade it, make sure your risk management is in place, because you could lose all of your money. Because boys and girls, these videos are for educational purposes only, and your results may differ from mine. That's one reason to have a stop loss in place. And that trading is very risky and you can lose all of your money, and that's a reason to have a stop loss in place. So if you're looking for trading advice, investing advice, financial advice, make sure you seek it from an accredited financial professional. Somebody with a certificate on the wall in a nice frame, probably behind glass. So that way, when you get your advice from them and you lose all your money or some of your money, you got your advice from an accredited financial professional rather than somebody that you heard about on YouTube or someplace else on the internet or in the elevator or wherever. Trading is risky, so be careful, boys and girls. So let's bring up the new beast. And before the screen shifts, you can see that the yen is below last week's low, which means we will not have an inside bar this week. There it is, the new beast. Notice the new beast gapped down, went into the previous week's wick zone, exited out of it. So from the open, you're up 227 pips. And even if you got in, if you waited for the previous week's high to break, you'd still be up 95, with the potential of being up about 100 and almost 200 pips, 180 some pips, maybe 190. It's a beast, right? Oh, one thing about the new beast, look at the spread, 4.0, 4.1. For the year, we are 163 pips above the open and 99 off the yearly high, which was put in today. Notice this big green candle. Notice this big red candle. Price needs to come to the open of those two candles. Now, this is very interesting. If you look back over the week, you see we had the first day of the month's range. There's the high, there's the low. A couple days ago, Tuesday, we broke out of the first day of the month's range. And then right here, we also broke out the first day of the week's range. Notice how the first day of the week's range was contained in the first day of the month's range. So that breakout followed by another, and she took off. So the beast would have paid on that simple horizontal line trade. Now, if we want to look at the weekly open, you see here you had 1 day of opportunity to take that trade. Notice the range so far this month is 407 and the average range 762. On the inside bar, we didn't quite make it to the weekly and monthly inside bar, but back here 17 days ago, there was an inside bar. Price shot out, dipped back in a couple of times, and then shot out again. Daily range right now we have 100 pips here, and we've got 3 other pairs over 100. We put in a yearly H1 highest open 6 hours ago. The monthly D1 highest open, daily highest open was today. You see price crisscrossed it a few times and then headed back down. Notice this big green candle here and another one here. Took out the pivot point. Notice hit the buy zone, moved up. Now remember, we have a spread of 0.4, so basically the buy zone is just 2 spreads away. Green rats, get ready. Definitely the range is large enough. And you see here we put in a new low this hour. Showed you we took out the pivot, took out the monthly pivot, and it took out the weekly pivot. Once again, one weekly missed pivot. Here was a missed pivot that we got taken out this week. And you can see here we took out that daily pivot. We do have a missed pivot this year from yesterday. But you can see there's not many missed pivots. Now, with a spread, now it's at 4.3. Oh, wow, down to 3.6. With a spread that big, you know this is not going to stay within 10 pips almost any hour. So, once again, you can trade it, scalp it, but on 3.9, just remember with a spread somewhere in the 4s, it's got to make up that spread. So be careful when you're trading the new beast. In and out of the wick zone right here. So you see the longs most likely would have resulted in a loss. We have a high there of 99.50. So if you add 4 to that, that's 99. Or 5 pips to that would be 49. So you might have picked up a pip. So you have to be careful. Definitely have your stop loss in place. Horizontal line trades, as you can see, profited. Now, on the new beast, see this spread on the Einstein lines would definitely have to change. Okay, Einstein. I'm trying to remember if I changed this indicator. We'll find out in a second. If I put it 0, yeah, if I put it, set it to 0, it's going to use one spread. Whatever the spread was at the time. Now, what I should probably do is give it a multiplier. Maybe you could say 1.5 spread, 2.5 spread, 3 spread. I might make that update to the Einstein indicator. And if you wonder why I call it Einstein, the TRO Einstein, it's because the relative to when you open the chart. How is price moving relative to that point in time? As you can see here, waffling maybe just about 7 pips, but maybe a little bit more, 8 pips, but that's not enough really when you have a 4.4 pip spread. Okay. We entered the upper ATR zone here on the daily chart. In fact, we opened in it, and that was probably a good indication to start looking for a reversal. The range today is 100. The range for the week's 344. Now, you have an average range on the daily of 150 and an average range on the weekly of 401. So we still have today and tomorrow to see if we get any more range. But with price dropping off of the weekly high, it doesn't look like that's going to happen. But anything can happen, so let's just see. Looking at the bar stats here, out of the last 1,000, 1%, let's see, maybe 2% at a time. There was 4, it was 5 or more candles of the same color in a row. Here's 1, 2, 3, 4 H1s in a row. Well, here we go. 1, 2, 3, 4, 5, 6 bull or green in a row. 1, 2, 3, 4, 5 black right there. So it happens. Here we go again. 1, 2, 3, 4, 5, 6 in a row. And notice price has been taking out these lows right here. So you see here, price has already crisscrossed this line and that low and this low, and it's coming down to see if it can take out that low. Oh, okay. The new TRO HL5 has the moving average. The current moving average, it doesn't make a squiggly, just gives you the current. But you can notice right here that it crossed below the 50, and that's one of the moving averages a lot of the squiggly line traders like to use. So I just defaulted it to 50, but of course you can make it via inputs. You can change that. So I hope that answers or that shows what that trader wanted to see, because he wanted me to analyze it. Now, he wasn't specific, so I'm thinking just show it on the charts like I did today. But if you meant bring up things like analyze it with all the frequency distributions, I can do that on another day. But just remember, fellow traders, as you're out there, it's not what you trade, it's how you trade it. So go out there and drain the banks.